Hi everyone, welcome back to Republic Labs. It's David here, and today I'll be talking about the latest headline of the Fed being probed by the US DOJ, what the implications could be, how it affects fiat and investment assets like commodities and crypto, and of course why privacy is becoming more of a luxury these days. And watch till the end so you don't miss out on any important highlights of the week. Let's go! So first, Powell said that the US Department of Justice has threatened a criminal indictment over his 2025 congressional testimony, framing the move as retaliation for defending central bank independence. And Donald Trump has repeatedly attacked Jerome Powell for resisting deeper and faster rate cuts, intensifying concerns about political interference in monetary policy. And this headline injected a layer of uncertainty into the macro backdrop. Regardless of how that story resolves, we can see that the markets are reacting, and the reaction is showing up clearly in commodities. We will see later on the charts that gold, silver, and platinum are all pressing higher in unison. And this is a broad hard asset response to rising policy and governance risk, which signals capital seeking insulation rather than chasing growth. And as long as this dynamic remains intact, commodities will continue to lead, while BTC tends to move sideways, while that macro pressure is being absorbed elsewhere. And gold is returning as the savings asset for central banks after the US froze Russians' reserves in 2022, and this gold rally kicked off at the start of 2023, after which it is up 141% and now trades at $30 trillion market cap, which is massive. And central banks have placed a structural bid under gold since the global financial crisis, accumulating around 500 tons per year based on the World Gold Council data. And in 2025, gold ETFs have taken in around 715 tons, which eclipses even the officially stated central bank demand. And precious metals have always played a catch-up trade that follows gold performance. Silver started heading higher in 2024 and platinum in 2025, and this is the boomer breaks equivalent of up season. And so both silver and platinum have strong industrial demand, and both have been at a supply deficit for a number of years. And all it needed was the investment demand to pick up following gold's epic run. In our 2026 market projection, we flagged that gold had not topped out and was likely to continue performing into 2026, and the expectation was never a straight line higher, up only. Pullbacks and pauses were always part of the process, but within a broader uptrend. And what matters now is not whether commodities are strong, but whether they are still accelerating. And gold is pressing into new highs, but momentum, as seen on the RSI, is not confirming, and until proven otherwise, this looks like a late stage commodity strength rather than fresh acceleration. And silver is telling a similar story, with price making new highs but momentum stalling. BTC continues to underperform gold, and historically BTC and gold do not stay this disconnected for long, and even in the last period that the relationship went out the bounds, the chart quickly snapped back, and so the trade implication is probably patience. Commodities are the release valve right now, and BTC hopefully moves next. As markets reacted to escalating political pressure on the Federal Reserve following remarks from Chair Jerome Powell, the rally was spotted across the broader crypto market, and we can see that privacy-focused tokens stood out as the biggest winners. Monero surged nearly 18% and Zcash climbed almost 10% as investors rotated towards censorship-resistant assets. And the market may begin pricing in a premium for credible private store values, with tailwinds building, government overreach, rising geopolitical tensions, CBDC rollouts, and Monero, XMR, and Zcash ZEC remain the only two networks with proven 10 plus years of distribution, and both market cap together worth less than 1% of Bitcoin. However, this extends far beyond finding the next privacy token to bid, as we believe that we're now at an inflection point where privacy as a default feature is non-negotiable. The value value of systems with embedded privacy will become much more sought after than those without, and private payments is the real unlock. Looking forward, we could anticipate privacy to become a UX standard embedded in applications and infrastructures, and if users and institutions demand it, protocols will be required to uphold it as a default feature, and we're already seeing it today with protocols like Pay. Morgan Stanley has filed with the SEC to launch spot Bitcoin, Ethereum, and Solana ETFs, and it reflects a strategic shift to vertically integrating digital assets across Morgan Stanley's vast wealth management platform and allowing the bank to keep the ETF fee revenue in-house. Notably, BlackRock, issuer of the largest crypto ETF, has yet to submit any Solana ETF registration, and Morgan Stanley's decision to prioritize Solana suggests it views near-term demand for Sol exposure, which has been supported by flows data. Since September 2025, Solana ETFs have consistently attracted higher inflows than Ethereum ETFs on a market cap adjusted basis, and even on an absolute basis, Sol ETFs have shown greater demand in 9 out of the last 12 weeks. However, treasury companies have emerged as another source of structural demand for digital assets, and Sol is still a laggard in this space, especially since demand has flatlined since October 2025, while BTC and ETH consistently receive bids. And the largest Sol treasury companies has been Forward Industries, and its share price has been in free fall since September 2025, and notably, nearly all major Sol treasury companies currently trade at an MNAV below 1, removing the value added from ATM offerings to purchase more Sol. And this leaves ETFs as the sole institutional source of demand for the time being, which is why a Morgan Stanley ETF would be a welcome addition. And so that's all for today, and thanks for watching, guys. If you like this video, please give it a thumbs up and subscribe to the channel. I'll see you in the next one. Cheers.